Welcome to TradeTheNBI.com. This is John's reports for the 14th. What we saw the other day, the inflation data was ugly and continuing to get worse. And the market shrugged it off, of course, because that devaluation just continuing to grow, which means the market has to make up for it. It was a bit of an inside day. You can see still no real negative short activity. Strong spike here from MBI the Omega Green here, which the rejection of shorts on the cyan right there is a clear sign that we're going to break into new highs given the setup. We have the rising gold. We all could see this was developing from an NQ standpoint, lagging significantly to what the S&P is, but that's just creating a more of a balance in the sense that the S&P is catching up to the uh, bigger move from the Nasdaq, and you can see a little bit of a differential between the two. Yes, you get the same DOC move, but uh, significant increase in short activity as well as just the weakness from a buy standpoint. So that's just a move from tech into other areas since that has had a significant uprun. The real crisis for bond traders as they continue to get foolishly whipped around, but that increase in rates eventually will cause people to want to move back into treasuries. But given the unpredictability of how much that inflation rate is going to rise, becomes a problem, and that's where we turn to oil, and you can see pushing back up towards its peak. And again, if it breaks into the 80 range, I think that the handwriting's on the wall. The Fed's going to be crippled. That would be shocking to see them cut into rising oil prices and that, because that's just a further inflationary move. The only thing that's going to stop that would be, well, a significant decline in economic activity, which would cause huge supplies in oil. We're not seeing that as of yet. So that means a continuation of it. Fantasyland in the Eurozone at this particular stage, as they're talking about cutting rates, which ironically would do the exact opposite for the euro. But, some people think that the dollar has made a significant move. But the reality is, what are you looking at? You're going to be trading amongst various currencies are all producing similar deficit situations, though the U.S. is a bit more outside of what everyone else is at the rate it's acquiring its debt. From a gold standpoint, you got to expect a further improvement in gold from that. The reality is, though, it's interesting. There's the move has been to crypto as the alternative, and even some trading that in the ETF version just gives them the access to it without actually the implications of what it takes to be in the actual crypto. So it's sort of like the paper market for gold, which a bit more manipulated than they can with the Bitcoin situation, is this going to continue to break into new highs. And as I said, on its way towards when it gets to that 80 range, it's going to be inevitable that it will reach the 100 peak. From an ETH standpoint, also doing the same, and you can see there's not a whole lot of interest in people getting rid of it. And interestingly enough, even in Bitcoin, in that people who've held the longest aren't selling into this new surge in highs, because the expectation is only going to go further. And it's not just an expectation; you can see it just in the real world considerations of what's happening with the dollar. As far as a devaluation consideration, from a 50K standpoint, after the pump up here, we hit the 76, filled back. We had the positive extremes going back right to about here, and the dip took those out, which was perfect. And pushing back up again, and you can see MBI Magenta still leading. So as long as that's the case, no end for the bull move. It's going to be a little more erratic, and like we talked about the volatility, and here it is later in the day, right as the market closes, you get that big swoop down, clear out any weak hand stops, only to ride right back up. And in post market here, Asian and the early European session, nothing but roses. Everything's moving in the upside direction, developing a few positive extremes, nothing dramatic that hasn't been filled early on at this particular stage. So it's all congruent. So I'm just going to more of the same, and then we're going to cap everything off with some kind of volatility event that will shake things up, particularly as you get too many option players in one direction, and that's when the broader section of the market right now has been mostly, I think it overtook for the first time since like early 2021, more option volume than actual stock trading. So that's the preferred risk management technique at this particular stage, but it has broader implications in driving some of these moves. The problem with it is when things start to turn, it will be quite fast, probably more so than people realize. I wouldn't call it a flash crash area, but definitely going to be chaotic when that turns around, just because of the gamma plays in that, and that gets into more technical stuff. But it's just something to be aware of, that as that shift takes place, and this way we're definitely going to be watching all the different time frames and continuing to go over it as it develops. But it's on the horizon. It's just a question of seeing where the money starts to flow, and we'll know that ahead of time. So, as always, anything relevant, I will put it on the Skype chat. Have a good one. Trade well.